Hey, how are you? Hope all is well. This is the third video in the series of our discussion on business use of vehicle. In the last video, if you remember, we discussed about the special deduction for the SUV. If you buy a SUV and that SUV has a gross weight of more than 6,000 pounds, but less than 14,000 pounds, then there is a special deduction where you can write off the whole cost of SUV right in the first year. I hope you remember that. At that time, I also made a comment that just in good faith or in safe harbor, if it's a very expensive SUV, then I would rather write off anywhere between 60,000 to maximum $75,000 as a business use. And I would take the remaining value, remaining cost of the SUV out as personal use. And today we are going to discussion why I did that comment. And while we are on that, we will also try to address a question which I usually get from my clients. They usually ask me, is there a list of vehicles that are allowed to be used as business? Is there a list that IRS comes up with every year or publishes every year that we can refer to, which might give us the list of vehicles that are allowed to be used as business? So answering your question, you'd be surprised to know there is no such list. IRS doesn't come up with a list of vehicles that are allowed to be used as business vehicles. It is practically not possible really for the IRS to come up with a laundry list of vehicles which would make sense for all the types and all the sizes of the businesses. It's just not practical. So what IRS does is, IRS says that for you to take any expense as a business deduction, such expense should be ordinary and necessary. For you to take a vehicle as a business deduction, such vehicle should be ordinary and necessary for your business. Okay, so let us focus on this concept, ordinary and necessary. What does that mean? Let us take a few examples. Okay, so let's say you are a hedge fund manager and you have all NFL players as your clients and you are managing millions of dollars for them. Okay, now in this case, your clients who are the NFL players would be very keen, would be very interested to see what kind of vehicle you drive. When you go to meet them, and in most cases, I guess, the NFL players might not come to you for the meeting, they would come to your office. In most cases, you will have to go to them for their meetings, for the presentation, to give them the quarterly reports, so on and so forth. So when you go to see them, they would be clearly interested and keen in seeing what kind of vehicle you drive, because that is how they might gauge your credit worthiness, your trustworthiness. And they might make a judgment about whether to give you their funds to manage or not, whether to give you their business or not, whether to give you more referrals or not, based upon the kind of vehicle you drive. It's quite possible. And in that case, you can make an argument that I need an expensive vehicle, because not only that expensive vehicle is ordinary in the kind of business circles that I am, everybody drives that kind of vehicle. Not only that that is ordinary, but it is also necessary, because without doing that, I might not get the business of NFL players. I might not be able to expand. I might not be able to get more referrals. So it is ordinary and it is necessary for me to have expensive vehicle and drive around that for my business. You know, a similar example would be a real estate agent, a real estate broker who deals only in $1 million listing. If you are a real estate broker dealing only in $1 million listing, and you go to a listing meeting in an economy car, there are chances that you might hurt your business. You might hurt the chances of you getting that listing that particular day. You see what I mean, right? Now, on the contrary, say you are a physician and you see patients in your office or in the hospital, and other than you seeing patients in the office or in the hospital, the only thing that you use your car for is for you to occasionally go to post office or bank or Staples, or a couple of times in a year you go to see your accountant or attorney, or maybe a couple of other times you use your car for going in on a breakfast meeting or a lunch or a dinner meeting, right? Otherwise, it's always your client, your customer, who in this case are your patients. They come to your office or they come to your hospital, and most of the times they don't even know, or they don't even see, or they don't even care the kind of car you drive. You know, in that situation, it might be very difficult for you to argue that you need a very expensive car for your business. Is it ordinary? Maybe. Maybe it's ordinary for your kind of uh, physicians to have expensive cars, but is it necessary? No, it is not necessary. That is where you stand to lose. You know, and look, all this thing matters only if and only when you are audited. Otherwise, we see all our friends driving this exorbitantly expensive, flamboyant cars, and we just assume that it is okay to do so. It is allowed to do so, when in reality, it is not. Okay? So I hope you understand the difference between what is allowed and what is not allowed, what can be ordinary and necessary, and what cannot be ordinary and necessary. That's why I always say you should take advantage of the tax deductions available to you, and you must definitely take the maximum benefit out of it. You should max out your deductions, but at the same time, use common sense and be reasonable in what you do. I always have told you this, you would have heard this from me many times. Garnish your food, don't food your garnishment. Okay, so be careful in that. There's also one question I would like to address here. Many clients also ask me, is it okay to have a car in a real estate LLC? And the answer is very, very simple. If you are a real estate professional, yes, it is okay to have a car in a real estate LLC. But if you are just a passive investor, putting your savings in a real estate just for the sake of investment, then you cannot have a car in a real estate LLC. For you to justify a car in a real estate LLC, you have to be a real estate professional. You could be a real estate broker, real estate realtor, agent, real estate developer, a general contractor, that kind of a person. If you're somebody like me who just invests in real estate for the sake of getting return on investment, and it's not my active business, that's not what I do day in and day out, then it's not okay for me to put a car in that kind of a business. I hope this addresses a lot of doubts and questions that you already had on the vehicle. In the next video, which I think is going to be the last in this series, we will address few questions like, should I lease the car or should I buy the car? Or what should I lease, what should I buy? How should I own the vehicle? How should the ownership be structured? Where should I use the simple method? and the actual expense method, the simple method where you have 57.5 cents per mile, and the actual method where you take all the actual expenses. Where does it make sense to use simple method? Where does it make sense to use actual method? And all such remaining questions. So I hope to come back to you within a day or two and we'll wrap this series. Hope all this thing is helpful. If you have any questions, please do feel free to email me and I'll try to address those questions in the next video. Okay, till then, take care, be safe, and stay tuned. Bye-bye.